Hi everyone! Welcome for the second day of our Tech for Good Summit. Welcome to the second edition of the collaboration between the French Tech Soul and the French Korean Chamber of Commerce here in Korea. Let's start with the opening remarks from Yannick Glemarec, Director of the Green Climate Fund, and then followed by Cédric Legrand, the Director of the French Korean Chamber of Commerce. So here is the mic to you, Yannick.
Many thanks. Good afternoon, everybody. On behalf of the Green Climate Fund, it's a pleasure to join you today for the opening session of the Tech for Earth Day. My remarks will focus on the need to accelerate innovation to avoid catastrophic climate change. We are not on track to reach net zero emission and achieve the Paris Agreement by 2050. The past decade was the hottest on record. The drop in carbon dioxide emissions from coronavirus lockdowns in 2020 and 2021 will have a negligible effect on the buildup of greenhouse gases concentrations in the atmospheres. Global temperature never exceeded the pre-industrial value by more than 2 degrees Celsius over the past 3 million years. The period which has seen the emergence of our species, Homo sapiens, and its instinct for bearers. Based on existing trends, we could cross this threshold early during the second half of the century. Climate impact are also materializing far faster than anticipated. For example, 20 years ago, we were not expecting threat to the survival of unique ecosystems to materialize before a mean global temperature increase of 4 to 6 degrees Celsius. Today, we fear that a 2 degrees Celsius increase in mean global temperature could wipe out 90% of coral reef and endanger the security and economic livelihoods of hundreds of millions of people. So what can we do to get back on track and to break these negative trends? Innovation is an essential part of the answer. History shows that trends are not a certainty and can be broken with innovation. A single institutional innovation at the turn of the 19th century, the limited stock company, allowed early innovators and industrialists to pool resources and finance the railways and factories of our three industrial revolutions. Today, innovations in digital technology and artificial intelligence, material technology, nanotechnology, genetic technology, robotics, biotechnology, transport technology, and energy technology, to name just a few, have also the potential to provide humankind with new fundamental capacities and rewrite our futures. But innovation does not always materialize on time and cannot be taken for granted. The innovation path from an idea to a scalable technology that works is long and uncertain. It can take decades before an innovation reaches markets. The key technologies that make the iPad a compelling innovation could be traced back to fundamental research that started as early as after the Second World War. History is littered with examples of techno-optimist goals that could not be achieved. For example, when a series of Clean Air Acts were passed in Europe and the United States 50 years ago, they were expected to incentivize a wave of technological innovation that would solve clean air problems within a decade. Half a century later, local air pollution has yet to be solved. A recent assessment of technological progress in the 10 highest GHG emitting sectors of the global economy, power, agriculture and land use, car, truck, shipping, aviation, building, steel, cement, and plastics, found that required technologies and business models to support the transition to net zero emission had reached the diffusion stage in only 3 sectors: building, car, and power. In all the remaining sectors, the transition had hardly begun, and required technologies and business models are still at the emergence stage. It's concluded that innovation is unlikely to materialize on time to avoid catastrophic climate change in the absence of coordinated efforts. Even when innovation materializes on time, it can create new unforeseen problems on its own. While the limited stock company is credited with ushering the industrial revolutions, the economic Karl Polanyi blamed another institutional innovation, the gold standard, for the dislocation of the 2 world wars in the last century. The gold standard was intended to create an integrated marketplace that would reduce the role of national government. Instead, the relentless economic shocks generated by the gold standard forced nations to consolidate and compete along national and imperial boundaries. The same risk of a solution today becoming the problem of tomorrow applies also to technology. For example, when the CFC's refrigerants were developed in the 1920s, they were touted as a safe substitute for the explosive and toxic ammonia and sulfur refrigerants then commonly in use. But half a century later, they were found to destroy the ozone layer. The miracle compounds of the 1920s had converted it to an existential threat to life on Earth half a century later. However, technology does not have a mind of its own. Humans have agency, not technology. Technologies are embedded in a social context, and it is a policy framework that we put in place that will determine whether innovation will materialize on time, be safe, and benefit all or only a few. Just as policies shape trade and labor institutions, they also shape innovation. Let us take the example of autonomous vehicles, which feature predominantly in many national green growth and climate plans. On average, cars sit idle 95% of the time. Autonomous vehicles, AVs, combining car sharing and ride sharing, could remove 80% of private-owned cars from the streets. The vast areas of urban land currently occupied by parking lots could be redeveloped to increase the resilience of cities to climate change. But the opposite could happen. The cost of traveling with AVs could drop so substantially that people could abandon public transportation, leading to an increase in the number of vehicles and gigantic traffic jams in the city. As the technology makes individual transport more pleasant, restful, or productive, it could also encourage households to move further away from their workplace and foster high carbon, high ecological footprint urban sprawl. It is our policy framework that will ultimately shape the social and environmental impact of AVs. A key challenge for policymakers is then to accelerate and steer climate innovation toward truly green, inclusive, and smart development. This challenge is even more acute for policymakers in developing countries who have little access to long-term affordable finance to foster and scale up innovation. In closing this remark, let me say a few words on the role of the Green Climate Fund to assist policymakers in taking up this challenge in developing countries. GCF is an open, country-driven partnership. It works with over 200 accredited national and international partners, including commercial and development banks, civil society organizations, United Nations agencies, and private equity funds. GCF is a capital agnostic institution. We use a range of financing instruments to meet the needs of developing countries and investors, grant, concessional debt, guarantees, and equity. This flexibility enables us to pilot new partnership and new financial structure to create new markets for new climate solutions. We leverage these capabilities in 4 ways. First, we have a dedicated grant-funded readiness program to support developing countries' effort to incubate novel ideas. Second, we pilot innovative ideas to establish a proof of concept. For example, we are providing risk capital to SMEs that are developing off-grid solar and climate-resilient agriculture solutions for vulnerable communities in East Africa. Third, we crowd in private finance by serving as an early investor to establish a commercial track record for new climate solutions. As an illustration, we are the anchor equity investor for what will be the world's largest seawater solar power plant in Chile. Finally, we strengthen the capacity of domestic financial institutions to finance the widespread adoption of commercially attractive climate innovation. GCF has also developed extensive environmental and social safeguards to promote inclusive and responsible climate innovation. Our ambition is to foster climate innovation that benefits women and men, the poor and the rich alike, and make climate action an accelerator for sustainable development. Thank you very much for your attention.
Thank you very much, Mr. Yannick Glemarec, for this insightful opening address. It was a great honor to have you to our Tech for Good Summit. We understand that the relationship between innovation and environment is very complex. On one hand, a question and concerns can be raised about innovation as a source of progress for humanity. On the other hand, innovation seems inevitable as to meet the challenges of sustainable development. And we see that recovery plans throughout the world, and in particular in France and in Korea, are based on those 2 pillars, innovation and ecological transition. To better understand how innovation can serve the objective of a sustainable development, we'll be pleased to welcome today more than 20 speakers for 3 sessions dedicated to climate change, green energy, green mobility, sustainability, and waste reduction, and a pitch contest we are able to organize thanks to Sanofi Korea and Mazar Korea, with today the pitch of 7 startups fully committed to the Tech for Earth. To finish, I would like to thank again Mr. Yannick Glemarec and thank all the participants, the speakers, the sponsors, and partners. We'll now continue with a session on climate change, moderated by Oriane Lemaire.
Thank you a lot, Cedric, for this introduction. So I will be the moderator of our first session of the day, which is on climate change. So welcome to this session. Welcome all. I'm Oriane Lemaire. I'm the Secretary General of the French-Korean Energy and Environment Committee of the FKCCI, which is a high-level quarterly meeting to foster business bilateral synergies. And I'm also the Communication Director of FKCCI. So I'm really happy to welcome you today to debate on this topic of utmost importance with passionate experts. So Mr. Glemarec gave you a really good introduction on the climate emergency. According to the Intergovernmental Panel on Climate Change, the IPCC, which is a reference, a scientific reference to understand climate change, we saw that greenhouse gas emission increased by 1.5% per year in average in the last decade. And since the signing of the Paris Agreement, these 5 years have been the warmest on record, and we witness more and more weather hazards that have aggravated consequences on humanity. So today I have the pleasure to welcome a really good panel of experts to present how startups, innovation and climate impact funding initiatives can have a great role to play in a cooperative mindset to mitigate climate change. So first, let's start with a round of presentation of our speakers. Let's start maybe with Arthur. Please present yourself and highlight your background with regard to dealing with climate change issues, and why did you choose a career in this sector?
Yeah, so welcome everyone. Thank you for having me. So indeed, I'm Arthur. I started 10 years ago, created my first company in the digital communities. So I was creating communities mainly on the social networks, and it really becomes interesting after a couple of years because we reach more than several millions of users on our different communities. So we transformed it into medias through applications, smartphone applications, websites, and monetized it with the advertising and partnership with some brands. I sold this company to a dating group, and after that I created another company more in the services, so dating apps, because I've seen that it's really profitable, and also games, but also eventual. I also sold this second company, and after that I was in charge of the Europe for an American social network named Triller. We were just 3, and at the end we were 400, so it was a crazy adventure with many influence marketing, many communities, many digital in general. But I was missing some meaning and some purpose because I discovered about the huge size and crazy size of the climate emergency, reading the IPCC report, as you told, and watching many conferences, expert conferences. And I got this conviction that entrepreneurship could be a great solution to tackle greenhouse gas problem and the global warming issue. So I really would like to put my competencies and my expertise at the services of the climate emergency, because I get also this conviction that we need to marry economy and ecology if we really would like to have an impact. And that's why today I co-found Time for the Planet, and I think we will go back to Time for the Planet more in details. But
yes, exactly. The link between economy and climate change will be a key topic in this debate. Let's move to Su-Young. Can you present yourself?
Sure. Hello, everyone. Thank you for having me. My name is Su-Young, and I'm an ESG, environmental, social, and governance analyst at Who's Good. We provide ESG data of Korean listed and unlisted companies to investors. So we analyze environmental, social, and governance performance and risk data from various public and news sources and we analyze it with AI technology. So for this career path, I was actually before more interested in general social sustainability issues. So I started working in marketing and communication field in both private and public sectors. And I've been focusing more on like social issues such as human rights, human trafficking, and gender issues in the beginning of the career, and actually my grad school in international development. But now, because of this urgency of climate change and because we are covering all the issues of ESG, currently I'm more working on ESG risk analysis. So basically what we do is to analyze news text data and categorize those articles into 17 ESG incident issues such as environmental pollution, biodiversity, climate change, labor relations, like business ethics, and so on. So we were, previously we were mostly covering only listed companies in Korea, even like a month ago. But we are recently expanding our coverage to unlisted companies and state-owned companies. And every day there are about like 15,000 news articles to analyze, and we actually successfully automating the process of categorizing those news articles and score the companies based on these ESG risk articles. And
we're going to move back a little bit to the technological solution that you guys
Sure.
developed to foster ESG. Let's move to Gulshan Vashista, who is from GGGI, the Global Green Growth Institute.
Thank you, Ariane. Welcome, everybody. Thank you for the opportunity to be a speaker on the panel. So my background, I'm an investment professional for 15 years. I've been working, I started working with the aerospace sector, not knowing so much about the climate impact of Boeing 787, but was a part of the team to bring Boeing 787 to invest into India. Followed up with my projects working with Rolls-Royce to also get them to invest into Indian manufacturing sector. Slowly moved on to the Government of India, Department of Science and Technology, where I learned a lot about innovation, incubation, technology transfer between the government and the public sector. Learned a lot about climate resilient technologies that were being researched and developed by the Government of India, and then transferring them to the private sector. That was the basis of a broader space. Hence the choice of working with GGGI. So GGGI is an international organization. We have 39 member countries with over 100 projects that contribute to sustainable development goals. We work in several thematic areas linked to sustainable energy, sustainable landscape, green cities. I'm a part of Green Investment Services team that is trying to move the needle to support our member countries to get access to also GCF funding to support climate action and inclusive development. So what drives me, what keeps me going is really the opportunity that my job gives me to bring in sectoral reforms. I take a lot of pride when we work in sectors where, of course, there's a social gender, poverty reduction, those kind of perspectives, but also to look at industrial revolutions, right? Where is the innovation, as was mentioned by Mr. Glemerick before? This is innovation, right? This is transformation. I take a lot of pride to be associated in the sector. That drives me to work on climate change. Thank you.
Thank you, Gulshan. Yeah, we're gonna get back also on the financing issue. Last but not least, we have Stanley.
Hi, everyone. Hi. So thanks for having me on this panel. I'm the program director for Southeast Asia for New Energy Nexus. So it's a global nonprofit supporting entrepreneurs in the energy and climate space. So similar to Arthur, I started my career in the digital space, so working in digital media, collecting online data, doing like all sorts of cookie targeting and audience segmentation. And taking a look at companies like Google and Facebook, they employed some of the world's best engineers. They have the world's best technology, and a lot of times they're using that technology to figure out how to optimize ad serving, right? So after doing that for close to a decade, it seemed clear that there must have been more to this use of resources, use of technology and online platforms. So I started to look into creating a couple of startups focusing primarily on collecting energy efficiency data for buildings and decreasing the usage of buildings and industrial processes. My exits were not nearly as successful as Arthur's probably, but it led me to a space where I met New Energy Nexus, this organization that runs all these accelerators, supporting other entrepreneurs in each country, building additional climate and energy focused startups and SMEs. And so I've been doing that for the last 4 years, building out the offices in Southeast Asia, as well as helping the expansion into Africa now.
Okay, that's a very inspiring path from all our speakers. Stanley, you have a little beep in your mic. I think we're going to try to fix this issue right now with our technical support. But let's move on to the next question. Let's talk about the context first. So now we're hit by a global COVID-19 crisis. we will try with the COP26 to reset the government's targets for climate change mitigation to not go over the +2 degree threshold. But now we are in a particular time with COVID that had a disruptive impact on our economic model with business closures, travel restrictions, working from home. That had actually a positive impact for global greenhouse gas emissions. So now, what is your sentiment on what was achieved actually since the Paris Agreement, and your sentiment on the impact of the COVID-19 crisis? So I address this question to all of you. Let's get back to Arthur on this. Do you have anything to comment?
Yes, of course, there's not so much or not enough that have been done, but I think now that we can measure the problem, we can manage the problem, as Peter Drucker would have said. And really, the thing is that we have to turn the fight against climate change into something desirable, I think, for people. Because today it's really something guilty and something where we are a bit all depressed, but we cannot go to the action and bring people to the action if we are staying in that state of mind. And I'm convinced about the fact that today it could be really exponential. I mean, the fight against climate change, because people know that anywhere around the world, I guess, not so much, but it started to be clearly a problem for everyone. And with solutions, if we are turning the state of mind in something into which people would like to go because it's desirable, because it looks like there is solutions and we can have hope, I think it could be exponential and we could really go to something interesting and exciting. That's what we are doing with Time for the Planet. We trust into this vision of solutions. Before everything else, we need to have the good state of mind.
Yes, I agree. Like, we need a new approach on that. I think that's what Biden is trying to achieve with his new plan on climate change, like released in April, trying to address it as a positive job creation trend. That's what we tried to do with France with the slogan "Make the planet great again." So yeah, let's move to Gulshan on this issue.
Arthur, I can't agree more. I think the need for something desirable is felt. And seen more in the time of pandemic. So just looking at some fundamental similarities of pandemic and climate risks, right? So both present physical shocks, right? The socio-economic impacts that both create, right? However, when financial markets crash, right, there could be market crashes, sovereign defaults, currency devaluations. The emergence of the collective experiences that the public and the private sector has been more shaped by financial shocks than by the physical ones. So, but of course, the pandemic now has kind of given a foretaste of what a full-fledged climate crisis could entail in terms of, let's say, simultaneous exogenous shocks to supply and demand, disruption of supply chains and global transmissions, amplification mechanisms, so on and so forth. So I think this glaring similarities have brought forth the understanding that more needs to be done, and of course remains to be seen the kind of business models that emerge through these efforts. Of course, some of the key positives, so to say, is that with at least now a lot of I'm going to touch upon this topic a little later on bankability of climate projects and how do we enhance the bankability. The hope really is that this pandemic would bring in thoughts for the financial model builders, for the financial analysts, investors, to bring in the level of risk and account it into the financial models, thus bringing in more financial viability to some of the climate projects. So really hopeful to see some of those business models to emerge and to be sustained for a long period of time. I'll stop there. I have a little more to say, but then we'll look for other opportunities during the...
On the bankability, I have a whole chapter on financing business model. So now we are just talking about the context. Soo-Young, you have anything to comment on your sentiment on the COVID-19 crisis linked to the?
Sure. So COVID-19 surely will have like a long-lasting impact. I think that's why we are talking about like the new normal, especially from the ESG perspective. So many people are in the field are talking about how ESG became even more important during the pandemic. So the first evidence, of course, was mentioned before, but ESG funds or ESG ETFs comparatively like had a better performance and showed a stronger resilience in the capital market. So I think people are aware now that like companies with stronger ESG will perform better at least in the capital market. And also like in Korea, especially during last year, there was like increased attention to issues such as excessive greenhouse gas emissions from buildings and the public has become more concerned about plastic waste due to the rapid growth of delivery services during the pandemic. So there was a growing awareness of the necessity for food and beverage manufacturers to switch to eco-friendly packaging. So as a result, I think the environmental issues are no longer like limited to specific industries like manufacturing, but also expanding to retails or other like hotels or other industries. Thanks.
Thanks, Soo-Young. Arthur, you co-founded a very innovative citizens-driven non-profit with already 1,000 companies involved to finance entrepreneurship against climate change. And you aim at raising 1 billion euros to fund 100 companies in the near future. So tell us about your business idea and the reasoning for your business model to truly have foster green impactful funding.
Yes, for the short story, we are six entrepreneurs. We created several companies in different sectors. And when we realized about the huge size of the climate emergency, we would like to act, of course, but first act as simple citizens. And what we have seen is that when you're not billionaire or president of the republic, you can buy a scooter and piss under your shower, and that's not enough. And we really need a tool. And we met around this conviction that companies could be the perfect tool, because by definition, companies are changing the way we are living globally and at a really large scale. So we were convinced that if we were setting the companies to the 2021 challenges, it could be the tool we all need. So the first thing we have done is to meet with scientists, and we had the luck to meet with crazy good scientists, like, for example, Jean Jouzel, who's the ex-vice president of the IPCC, and many others. And we asked them about the solutions, because they told us that there is solutions, and we really would like to know that kind of solutions. And they always said the same thing. We will need some sobriety, of course, but we will need also innovations, because it's impossible to do the transition without innovate, and it's impossible to get sober without innovations. So innovations will also bring us to the sobriety. And in that way, we have met with many innovators, and we were really surprised, because those innovators creating crazy things all around the world, and there is things that could change the game globally for real. And when we discovered it, we were really shocked, because we doesn't understood why those innovations are not still in our daily lives. And the reason is that because those scientists, those innovators are not entrepreneurs. They don't want, or they don't know how to find strong business model to their innovations. And they don't know how to scale it globally into the forms of goods and services we all use. And that's the mission of Time for the Planet. The idea is to create 100 companies that are fully set to tackle greenhouse gases, and our daily life is to detect some innovations all around the world that can change the game globally, and to hire entrepreneurs to find strong business model to those innovations and transform it into companies. And we are co-funding the companies with those two parts, so innovators and entrepreneurs, and injecting money to accelerate and maximize the impact. But as you said, we would like to raise 1 billion euro to create 100 companies, and we will not do that alone. That's why we are structured as a movement that anyone can grab and in which anyone can take part. And today we are more than 21,000 people joining us as shareholders, and there is incredible people helping us to reach more people and grow Time for the Planet. We started 1 year ago, and today we are close to 4 million euro raised, more than 1 million just on the last month. So it's really exponential. And our goal is to accelerate still. We are creating the first companies in June because we received more than 400 innovations folders from all around the world. And today the idea is really to create the first companies and accelerate each year more, because we are bringing in the adventure many incredible and talented people that help the movement grow each day. And that's really the hack with Time for the Planet. And more than that, we are also non-profit. So Time for the Planet is non-profit. We are creating profitable companies, of course, but the money that going back to Time for the Planet is always re-injected to create new companies. So our shareholders come to have what we are calling a rate return on the planet. So that's just a quantity of greenhouse gases not emitted or captured by their investment. And they are coming for it because we trust in the power of the money, and we are convinced that money, if it's well used, could really help us accelerate each year more, because companies had this extraordinary power to create money, and we would like to use this money to create new companies each day, each year, and accelerate the fight against climate change. So we really would like Time for the Planet to be an exponential movement in which anyone can participate. And it's just 1 minute on our website to become shareholder. With just €1, you can start.
That's a truly inspiring model. I think we need more initiatives like this to really make a change. So Gulshan, you're a specialist in green investing. You were telling us earlier that one of the greatest challenges is bankability of green projects. Please, can you share your experience about the challenges to access to finance that are not supposed on projects that are not supposed to be bankable?
Sure. Thank you, Ariane. I think I would want to draw the attention to what this financing gap really looks like. What in numbers, right? So I have some dated numbers for current supply of climate finance, and it is in the order of $550 billion of the current supplies. Now, what are the future demands looking like? Some projections, taking OECD, non-OECD data, talks about 2030 projections. If you look at non-OECD climate finance projections up until 2030, we're looking at a broad range of 7.4 to 8.9 trillion that are needed to look at climate mitigation and adaptation. Now, total projected up until 2030 is 4 to 4.9 trillion So we do look at a climate financing gap of 2.4 to 4.8 trillion Now, that goes to say that, Arthur, actually your model is much needed to draw in more finance, which is linked to climate mitigation adaptation projects. Now, to the question, Orion, what is the key barriers, or what are the key risks? Most of them perceived. Now we can bucket them into 5 major categories. I think it's spoken enough on the political risk, right? Especially for the emerging economies, on the unstable political environment, national, local securities, especially linked to some of the African countries and also Asian countries. Regulatory risk is one of the major risks where bankability comes to question, right? We're going to talk a bit on the aviation, and major roadblock really is on the regulatory aspects from the governments. Technology risk cannot be, I mean, it's an obvious one, right? Like how advanced the technology is. The major concern with a lot of banks, for example, is they do not invest, not because they don't know that it's a bankable project, but because they don't understand the business model linked to that particular technology. Credit risk is a big one. Is one of the most important risks that is out there is a perceived credit risk, because so many countries that we work in, the 39 member countries that I spoke about, one of the major interventions is really to just have SMEs and companies to just maintain their books regularly, so that they can then have access to finance. So credit risk is really one of the largest ones that I want to highlight. And of course, one big one is the capital market risk. Now, the immature national and local financial markets, especially again in the LDCs and the emerging markets, limited market liquidity is a big one. And one of the major factors not spoken so much about is the hedging risk, right? In a larger context of investment world, it's a small risk, but it is a big barrier. For example, Pacific, a Fiji Development Bank cannot do a lot of transactions simply because they don't trade so much in US dollars. So hedging is a big concern in many ways. Now, some ways, if you want to look at project financing and how these projects would work, you can bucket that into early stage bankable project, finance project, and then a mature industry project, right? A lot of capital from public capital is needed for the early stage projects. A lot of grant financing. I think GCF earlier spoke about the readiness projects, to get them up to speed, to get them to leverage commercial capital going forward. So I think a lot needs to be done there to bring countries up to speed, so that they have enough capacity and to develop that project pipeline. To be honest, there isn't much of a dearth of capital out there. Not too many people's surprise here is that actually there's a dearth of good bankable projects that can have access to finance. So I think there's a big gap that needs to be filled from both sides, right? One, to raise enough capital, but at the same point, to raise enough projects to fund. So I'll stop there for now to see if there are more questions at a later point.
Yeah, I think in this gap, this is why your kind of organization have to be to be really strongly involved to fill in the gap.
Yeah, absolutely, and finance is such an important part of the puzzle, right? But the most pressing issue of moving the energy transition from fossil fuel systems to renewable energy is the number of players and the number of pieces of the puzzle that need to be working together, right? So we mentioned about finance. There's policy, right? So policy has to enable all the finance to be able to take action, right? And then there's like big businesses, but then there's also entrepreneurs, right? We can't expect all these larger incumbent businesses and companies to be able to do all the projects and do all the work, right? So at New Energy Nexus, that's what we believe. We believe that there needs to be tens of thousands of new businesses working across, as Yannick mentioned, buildings, cars, power, the three main sectors of the carbon transition, in order to move things forward. So we need new entrepreneurs creating clean energy companies, creating energy efficiency solutions that buildings and industries can use, and then also figuring out how to electrify mobility, the transport sector, right? So everything from new EVs, retrofitting. We're supporting a company in Vietnam right now. They're retrofitting bicycles to turn them into e-bikes, right? And that fits very well with Hanoi's policy of banning e-scooters by, I believe, 2045. And so that's like an example of how policy would work with technology and work with entrepreneurs to actually create these types of impacts.
Thank you, Stanley. I'm glad we got you back.
Right.
We mentioned about the financing issue, and the financing brings us to governance issues. So Soo-Young, as you mentioned earlier, we witnessed a surge recently on ESG initiatives, ESG financing, and also regulations in Korea especially. And actually, Korea has been a bit late on ESG and tries to improve in standardization criteria in order to prepare for its neutral carbon target by 2050. That was announced by President Moon Jae-in last year. So please tell us about major ESG initiatives in Korea, and what do you advise in your daily job? What do you advise to the company which try to comply with higher ESG standards?
Yeah, so as you mentioned, Korea is not exactly a leader on ESG, but I think Korea tends to fast acting out sometimes, so norms change pretty quickly. So within this recent 6 months, everyone is talking about ESG, and I think it's gonna change a lot pretty soon. So the biggest initiative is, of course, Korea Green New Deal, which was announced last year. So Korea officially announced net zero goal for 2050, and this policy included improving infrastructure such as public buildings for less energy use, transition to renewable energy, and incubating more green startups, which is a good news for green startups and R&D field. So for Korean companies, I think there will be more regulations to follow to improve their ESG. For example, Korean Financial Services Commission and Ministry of Environment announced the Green Finance Plan. So there will be like a Korean version of EU taxonomy, which defines like green activities, or there will be stricter ESG information disclosure guidelines. And also finance sector has to have a strategy to mitigate climate risks. So I think the most crucial part for companies to manage their ESG data is to manage their ESG data in an efficient way to prepare for the stricter disclosure. At my company, we are utilizing the data from public sources such as government or international organizations. So especially for environmental data, we use the data that is approved by the Ministry of Environment, not the data from the company itself. And also more and more ESG assessment and data providers will have the controversies in their assessment. So it means that if there is like incident or accident, even though they have like all the certifications such as ISO 14,001 or something, it's gonna be more important that they don't have the ESG like incidents or pollution incidents, and they need to be aware that like a possible risks and try to prevent those incidents. Thanks.
Thank you, Soo-young. This indeed like data management. I had a question actually, especially about data management, but you answered it already. But I think we are running a little bit late, so let's jump quickly into our next section. So I wanted to talk with you guys a little bit about startup ecosystem, because we are an event that's fostered for a good startup ecosystem. Stanley, I'm getting back to you. Your non-profit organization, actually, you support clean energy entrepreneurs with funds, accelerators, networks, and you just published actually your 2020 Global Impact Report. You already mentioned with us an interesting e-bike initiatives. Please, can you tell us a little bit more stories about the remarkable startups, like some stories of startups that you supported last year and the way you accompanied them, and what challenge do they face in Southeast Asia, especially since it's your specialty?
Great. So New Energy Nexus, we're present in 10 countries right now. So we started in the US, but now we have offices in India, China, throughout Southeast Asia, and Thailand, Vietnam, Philippines, and Indonesia. And so when we think about how to support entrepreneurs in those countries, we first take a look at the energy landscape, the market, what incumbent players are doing already, what does the policy look like, what areas are opportunities for entrepreneurs to tap into. So we structure our programs to take advantage of that. So for example, in the Philippines, we know that there's pretty great energy efficiency policy that's being passed recently, and that's going to kick into effect, mandating energy audits, energy managers for large companies. So we would think about supporting a cohort of energy efficiency entrepreneurs to be able to understand how to do audits, how to leverage technology to build digital twins of buildings, so you can cut down the cost of these audits, right? We can upskill energy managers and have them work with different IoT solutions to manage the loads for specific HVACs or specific industrial processes, right? So that's sort of like our approach to supporting local entrepreneurship ecosystems in energy and climate. Just to give a couple of other examples, we also do international programs where we bring companies from elsewhere into Southeast Asia. An example, we ran a program with the Canadian Clean Tech Accelerator, and so we brought this company, CarbonCure. They do a carbon dioxide injection into concrete, makes you use less building materials, and chemically makes the material stronger as well. So that's a decarbonizing type of technology for the construction sector, and we're trying to get them pilots in Vietnam with a number of construction companies and heavy industry companies as well. So these are the different ways that we aim to support. It's either, and it's always customized to the specific solutions and to the country that we work in.
Yeah, thank you, Stanley. I think we can do a little focus on sectoral issues. We have an expert here on aerospace. Gulshan had some experience in his previous professional experiences, and we know that the aerospace sector is one of the major polluting sector, and that we are trying finding ways like new technological solution to make decarbonized air transport. So maybe Mr. Vashista, you can tell us a little bit about green trends in the aerospace sector.
It's a great question in many ways, and I don't know because it's my background that you picked up the question, or because how critical this sector is to climate change. Because I think this information is very important to give. When the early drafts of Paris Agreement was made, international aviation and shipping were in there, but it did not make the final cut. So the final Paris Agreement actually does not have the aviation and the shipping sector. So I can tell you that they do not have a target as such. Then they are not aligned to 1.5 or 2 degrees Celsius global warming limits in any case. So that's a downfall for not holding them accountable for emissions. While they do contribute a good 5 to 6%, and with the increasing number of air travels, of course, thanks to the pandemic, that has come to a steady stall right now. But yes. So what is the outlook really? What is the International Civil Aviation Organization doing? I do want to bring forth a discussion on CORSIA. Now, CORSIA is a very interesting carbon offsetting and reduction scheme for international aviation. This is a bit like carbon trading, if you like. So it's a very simple mechanism where aviation players can account for how much they contribute to the pollution, and then trade it for either in terms of dollar amounts, or that can be invested into climate projects. So interestingly enough, if you look at it, the sustainable air fuel, which is based on which is biofuel, reduces the emissions by 80%. Is not being used. Air BP is the market leader, and it's not being used simply because, of course, it's not financially viable. Now, if you look at the solution is in the problem, right? If you increase the costs of air travel, the air travel reduces, but then there's another problem that for a sustainable solution to be there needs to be economies of scale. So it's a bit of a chicken and egg thing on how these investments would go forward. CORSIA can play a big role in terms of one, holding the aviation sector accountable, and creates a mechanism where they can measure, verify, and then trade off. There is a bit of a complex situation whether you account those carbons towards NDC, because NDC is a part of climate or Paris Agreement, while CORSIA is not. But those kind of technicalities can be worked out, in the longer scheme of things. Now, what are the outstanding issues, especially linked to alternative aviation fuels? Now, there is already a big discussion around which fuels are eligible for CORSIA. Again, it links to the measurement and verification. A key challenge to any energy efficiency project really is just measurements and verification. So, complex issue again. We need a lot of regulatory interventions to drive the aviation industry towards cleaner, greener future. Yeah, those are some of the points. It's a big discussion. There's a lot that can be spoken on the technology front.
Yes.
Boeing has made a big change, I think, with 787, that they started to go towards move away from titanium, aluminium, go towards CFRP. Engine changes. There's been a lot of technological changes, but safety there is a concern, right? Changes in aviation industry is not easy. Small rivets changes can take years to happen. So, long way to go for the aviation industry.
Yeah, thanks, Gulshan. You're right. I mean, this is a full topic in itself, and actually we're going to have a session dedicated to decarbonized transportation a little bit later today. You can check it in our agenda session section of this platform. I wanted to get back to Arthur on the startups ecosystem. I want you to talk about your ecosystem. So, I mean, what are the criteria? As you say, you want to fund 100 companies. So what are the criteria the companies needs to meet to be selected in your financing program? And what's your next milestones about that in the next few years?
Yes, so we have a really selective process because we receive many folders, as I told you, and so it's in 4 steps. The first step is really a community step because we are teaching what we are calling accessors. It's people like you and me. We are teaching each week to train them to select the innovations with 6 criteria, of course, the impact, but also the replicability, externalities, etc. And the idea is to create a top 10 each trimester because we are bringing this top 10 to our scientific committee. It's 14 experts, European experts, that are here to validate that the innovations could go to the global level, and of course that this is not bullshit or dangerous. And after this step, we are testing the innovations directly on the market about their economic potential. So we are testing it with potential CEOs that would like to grab those innovations and create companies in the future in partnership with us. And this step is really crucial because we are seeing if there is some concrete applications for those innovations, and we can see if there is a real market and real potential clients. So we are using some entrepreneurial techniques, classic techniques. We are selling applications like it already exists, and we can see really quick if there is interest for real. And after that, there is the last step. We are bringing the innovations to our all shareholders, so the 21,000 today, in a general assembly, and they are all voting for the innovations we will finance. So altogether, we are choosing after this 3 first step on which innovation will go. And that's really a collective way of decision till the end.
Yeah, thank you, Arthur. So everybody, we have many startups in our audience right now, so they could contact you to submit their project. We are 14 minutes left before the end of the session. If you have any question, I don't see any question yet on the Q&A, but it's the time to ask because I will jump into the Q&A session really soon. I wanted to get back to Soo-Young about data management. So your company has an innovative solution about that. Can you tell us about how data management can be used to foster climate initiatives?
Sure. So,
and what are the technological challenges linked to it?
So right now what I do is to research on global guidelines on ESG and make it into our analysis framework, collaborating with data scientists and developers. So before this job, I didn't really have any tech-related experience, but now I'm talking about like natural language processing, context recognition, name entity recognition, etc. And I think it's really rewarding to work in this tech and corporate social responsibility area. So right now, well, conventionally, ESG evaluation for companies has been recognized as a procedure that only requires qualitative evaluation by researchers. However, I think it's transitioning, and now ESG evaluation is quantified just like financial data. So data science technology now enables us to analyze a huge amount of unstructured text data that exceeds human ability with the new analysis methodologies, and we can quickly identify ESG risks when we evaluate corporate sustainability. And I think it is actually rewriting the history of investment because a lot of investors are utilizing the ESG data, and it's actually making a change to for investors during their decision-making process for investments. And the other point would be the ESG assessment is becoming the norm for all kinds of companies. So previously, like ESG standards are more important for listed companies, but now like Korean National Pension Service, which is like one of the largest pension funds in the world, they are requiring ESG assessment for their bond products, which is like including unlisted companies or state-owned companies, or some of investors are actually doing this, checking the ESG data for the companies that is preparing for their IPO. So I think it's important from the technology perspective because this expansion of coverage means we need to collect and analyze more and more ESG data. And it is not always clean and structured. And of course, well, outside ESG field, in any other area will be the same, right? So even when I was studying the international development, we always talked about to monitor and evaluate SDGs, we need data for, especially for developing countries. And I think it's really, really difficult, and more data analysts and scientists should be included in this data mess in this world. Thank you.
Yeah, thank you, Soo-Young. We are almost reaching the end, so I have a last question. I don't see question yet on the Q&A, so I'm gonna go to my last question that was addressed to Stanley to kind of react to what Soo-Young says on the technological challenge side. You are a specialist of green tech. So can you tell about the challenges in green tech? Especially in deploying smart energy systems in countries where, developing countries where it's especially hard?
Yeah, and I I just wanted to react to what Soo-Young said about data analytics and for ESG. Right now, we're working on a new program. It's called the Climate FinTech Initiative. So after working in the energy technology sector for the last 5 years, we realized that whatever projects are being financed and can get financing will happen, right? So if fossil fuels and coal projects are getting the financing, then that will happen. So we have a lot of partners working to end the financing for that. But at the same time, there's a lot of new fintech solutions, climate-focused fintech solutions for either asset managers or for funds, even at the retail level, climate-focused credit cards and other financial instruments that can help to green the entire financial sector and to at least have the managers and also for the consumers understand their actual climate impact, right? And so that's like an accelerator we're putting together, running in Zurich, in China, and hoping to start in Singapore as well to help these green finance fintech companies to engage with financial institutions. Regarding deployment of technology in Southeast Asia, I mean, it's really like not about technology. Like I think existing technologies for climate and energy already exist, right? It's about business models and the scalability of things. So a lot of the work that we do with our entrepreneurs, a lot of them are actually in Southeast Asia focused on business model innovation. So they're using solar PV for maybe agricultural purposes, for water pumping, they're piecing together IoT for data collection. But these technologies have existed for a long time. Like it's not a matter of the technology, it's how you structure the product, your pricing strategy, your go-to-market strategy. And that's a lot of times like what we work with our entrepreneurs on. How do you target the best customers for your first target market, right? And that essentially is the key challenge for successful businesses in this space. It's how do you create a successful, financially sound business model to go to market, and how do you execute on that effectively?
Thank you, Stanley. We have just 1 minute for taking a question from the public. We have a question from Michael Yin, a founder of Trinity Eco. He's asking, what are the current sustainability frameworks that Korean and French companies are complying with? Let's go to the Korean side. Maybe Soo-Young, you have some comment on that, the sustainability framework. I think you presented a little bit of the ESG initiatives in Korea, but maybe you want to add a little bit more to that?
Sure. So in Korea right now, only like a certain big companies has to have like a sustainable report, but it's only for like a top company, biggest companies. But they are going to be requiring more and more companies to publish sustainable reports, and they will have ESG disclosure guidelines pretty soon. And I know EU has much more stricter ESG guidelines and disclosure rules and regulations. And about the climate risk, I know from 2030, I think Korean government will have all the KOSPI companies has to publish their climate risks in their reports. And also, I think Korean MPS, they will requiring other investors to look at ESG performance for the companies even before the IPO. So I think it's getting stricter and stricter. And yeah, I think that's it.
Yeah, thank you, Soo-Young. I think it's time to wrap up. If you have any words to conclude. So earlier we said that we need a positive approach, we need a new mindset, to say that climate change, we need to be positive about it. We present it as an opportunity. Maybe you want to say a few words to inspire us for this first session of Tech4?
Yes, so just in one word, but I think climato-optimistic, because, do you hear me? I
yes,
think there is a legal...
there's a little bit lag, but you...
Okay, so I was saying just climato-optimistic. I like this word because we really need an hopeful vision to bring people to the action now or never, massively and globally. And I think, and I say it again, it will only appear if it's desirable and if people really would like to do it, because it looks exciting and it looks like more an opportunity than an issue.
Thank you for this word. Gulshan, you have any comment on that to wrap up?
I just have a few points to leave onto the table. Where have we reached and where do we need to go? So one, on the political resilience. Now, of course, with the Biden government coming back and comes along is the political resilience. But honestly, the Trump administration withdrawing didn't really, it was meant to be a body blow, but really it wasn't an effect so much towards the agenda that Paris Agreement had. So that is a big plus. Of course, normalizing net zero is a bit of a buzzword that we hear from across the globe. China, Japan, South Korea already signing up, joining the EU and UK in setting carbon neutrality goals. This trend also goes back to Paris Agreement, but the point really is that they are no longer buzzwords. Countries are committing to some targets, which is great in many ways. There is a clean energy shift. Clearly, the solar PV has taken off in some ways. The financing landscape has become pretty open. Of course, there are countries such as Indonesia where utility scale solar PV has not taken off. A lot of governments, a lot of investors, have tried their hands, but unsuccessfully. But then, of course, want to leave with some sense of optimism with institutional changes that have started to happen, where governments have acknowledged national NDCs and are working towards that. So yeah, any sense of optimism about the progress driven by the Paris deal must be tempered.
We're going to see the COP26 in Glasgow in November will be key in reviewing these NDCs and reaching an agreement with a new concept of a fair transition, actually, just
Indeed.
transition, to marry the climate change issue with economic development and inclusive economic development. And that's why we did an event that deals both with climate change, Tech for Earth, and Tech for Society, because every issue is intertwined. Soo-Young, maybe you need a word. You want to share a word for the...
Sure. So right now, Korea has so many homeworks to do to achieve net zero. But I think I want to be positive. But to achieve that goal, I think we need stronger public-private partnership. Because, for example, to achieve RE100, Korean companies actually want to do it, but they don't have the access to renewable energy in Korea right now. And I think it's because of the energy structure. So I think government really should be working on building the better infrastructure, and they need to collaborate with the private sector more aggressively to build these. And I think green startups in Korea should be getting more funding from Korean government, because they are in the process of Green New Deal, and they are actually expecting it. So please act more in Korea, and hopefully Korean government can support. Thank you.
Yeah, and this year actually the carbon market in Korea went to phase 3, which is including more constraints, the big companies, so to have a more efficient carbon markets. Stanley, you have maybe 20 seconds for the...
Sure. So I just wanted to thank you for having me. I want to encourage everyone in the audience, if you have a great idea for an energy or climate business, please come to us. We'll support you in making that a reality. And one last word I want to leave everyone with is the concept of Ubuntu. So Ubuntu is an African philosophy that we have since made within our organizational values. And it essentially values essential human virtues of respect, dignity, compassion, solidarity, and working together. And so in today's climate, like given the world situation, we can all use some of that. So thank you again for having me, and good luck, everyone.
Thanks, Stanley. We couldn't have a better conclusion.